Well, it seems like it's the believability that something positive is going to come out of this, Brian. I mean, that's been something since the beginning of this started. And we talk about what are the catalysts in the market each and every day. Well, the catalyst for the last couple of weeks, ever since we got through the bulk of earnings, has been looking at the tariffs, the tariff talk, and what are we going to do? When are we going to resolve this? In the meantime, just over the last week, take a look at what the industrials have been doing. Absolute explosion to the upside. And now today, you finally get a little participation from the banks. The financials finally moving up as you look at the 10-year trading around 3.1 or very close to it. So this rotation we've seen time and time again. We talk about the NASDAQ stocks all the time, the FANG stocks. Are they the only thing moving? No, we've talked about it being much broader, and now we're seeing some of the broader side of the market actually pushing the market higher.
Which Anastasia, which is odd because we've been talking about FANG, you're right, but I would add to that we've talked small and mid caps because, hey, no exposure to trade, they're domestic. Now we're seeing companies that do have exposure to trade and do have exposure to the US dollar start to move as well. Is it on optimism? Something will get done, or have we just said, you know what? It's not as bad as we thought.
I think that's exactly it. I think what we got yesterday is not as bad as feared, and because of this, markets are striking a very optimistic tone. I will tell you, I'm a little less optimistic that this is the worst is over between the U.S. and China. I do still see reasons for the trade tensions to escalate. So this is why this is a market that we still want to hold, but we still want to hedge pieces of it. And tech is actually being one of those pieces because we're clearly seeing rotation out of everybody's favorite sector and also rotation within the sector. If you look at what's happening in tech today, it's not just the social media stocks, it's not just the semiconductors, it's now the software stocks that are also coming under pressure as well. So something to watch. You
know, sometimes, Sarat, also the other thing to watch is math. And I'm not taking anything away from tariffs. They matter. We talked about it with Polaris yesterday. Input costs going up. Consumers have to pay more. Will they be able to pay more? Right now they can. Worst case scenario on tariffs, call it 25% on $300 billion. Okay, $60 billion. That's the GDP of Rhode Island. Is the total worst case scenario really going to be that bad enough to dent the profit expansion and multiple expansion that we have seen?
So I think the market's looking at it at one time, right? They're saying, look, this could happen. It'll probably get resolved. Worst case scenario, you know, in a quarter or two. The longer term fear is this stays on and more tariffs go on. But I think the market's also reflecting this because the S&P now has traded down in terms of its multiple from the beginning of the year. The stocks that were hurt the most, the industrial stocks, the financial stocks, they all are kind of coming back because it's always kind of like, you know, they sell off when you don't know what's happening, and now you get a little more certainty, so you're coming back on that side as well.